We shift focus to results. Curro has delivered higher first half earnings, this despite the start of a 2025 characterized by persistent economic constraints on South African households. The independent school network's operational successes did not translate to learner growth in 2025. Curro CEO Cobus Loubser joins us now for more on the performance. Thank you so much for your time, Cobus. Now, does the slower growth in learner numbers derail Actually, just talk me through that performance.
It is a challenge, and I mean, if I reflect on 2024, we had an exceptional year, like a really remarkable year. We had record matric results. We had athletic and sporting achievements off the charts. We had exceptional participation and achievement and culture and social and community kind of activities. So in our core pursuit, our kind of social mission, if you will, of providing exceptional education to as many learners as possible, I think we did really well. And with a lot of ambition, a lot of energy, and quite frankly, we're super excited about 25 because there's much more to come. And then you look at the financial metrics, and by and large, I think it was a very credible performance. So, you know, we increased our turnover by 8%. We increased our profit margins. We increased our earnings by 13%. The dividend is higher by 13%. We generated more cash than what we needed for capex, and that's positive. So those are good, healthy, I think, indicators for us as an operation, and it underscores that the kind of financial discipline, the innovation, and I think the passion for education that we have. But unfortunately, it didn't translate to kind of as much new learners in our business as the previous year. Which is kind of frustrating because one of the great things is that we saw an improvement in the retention of existing learners. So we saw families who are in our kind of operation really, kind of enjoy our strategies and tactics to improve our campus experience, to give more opportunities, to drive more advantage and more gees. And they seem to enjoy that, and some more families are staying. But we had about 1,000 learners less enrollment, new learners than the previous year. Nevertheless, still close to 15,000 new learners with us, which of course also endorses what we do.
It's actually quite interesting. You talk about all these operational successes that have basically filtered through to the financial metrics, but also your learner retention. But at the same time, you also want new learners. And I'm wondering then, how are you navigating, between being accommodative of a constrained consumer and the need to manage your revenues and your margins?
I think, over 3 decades, really, Curro has created a very resilient business with a lot of fortitude. And I think these results is evidence of that. It demonstrates how we've been able to navigate a very difficult environment. But we can't escape that environment altogether either. And that, I think, is evident. If you look at the kind of enrollment number, it's a good number. It's an impressive number. It shows lots of demand and interest, but it's less than the previous year. And to some extent, that talks to South African families and the extent to which we remain under pressure, even although there's been a slight improvement in inflation and, of course, a softening of interest rates. So from our perspective, we think it's cyclical. We are focusing all of our efforts, all of our skill on creating great experiences for learners, and we think that by doing that, by focusing on the value end of the proposition, that proposition is going to be compelling, that it's going to attract more learners, and that we're going to keep going for decades. So that's the long cycle business that we are running through the cycle, whatever that may be.
So then, how have been the dynamics playing out in your debtors book and bad debts?
I think the issue of we've got a service and we must charge a fee commensurate with that service. We can't offer the service for free. We are custodians of shareholder capital, and we must yield a return on investor capital. And in fact, it's critically important that we succeed at demonstrating that this business model is a success, because we need more investment in education.
Yeah.
And we certainly believe in it because we keep investing in our schools. So I think from our perspective, important that we do well for investors, but of course that's a function of providing excellent, high quality education to our learners. And so I guess then lies this kind of tension of making sure that we maximize opportunity, maximum operational efficiency, high quality, and a great experience. So I think that's kind of how we think about it and how we try and drive it.
Yeah.
And if you talk about the debtors specifically,
yes,
where we're at is that we've actually done quite well with debtors over the last 2 years, even although economically it's been tough. And we've seen an improvement in our debtors book, an improvement in aging, kind of a sort of lower provision percentages. And then at the end of the second half, at the end of 2024, we had more accounts terminate. Not so many more accounts, but more value in those accounts, so higher average values. So potentially, people who were really under pressure, that kind of pushed the number up by about 100 million rand. And if you kind of strip out the portion that's above the fee increase, it's still meaningful. And so we were very prudent, and we've provided for much of that increase in the debtors, because we don't know, and there's a risk, and we've provided for it. So disappointing from that perspective, but I think for us that the real heartbreak is when families have to leave our operations because they can't stay in the race.
Yeah, and I'm wondering actually, Cobus, does the slower growth in learner enrollment derail your capacity utilization effort in any way?
I don't think it derails it at all. I mean, the buildings are built, they're there. The facilities are in place, the fields are green, and things are kind of available. So it really, if anything, strengthens our resolve to fill that capacity, to create more opportunity and to kind of welcome many more learners. So from that perspective, it has no immediate impact. What it does do is it kind of just slows down the pace at which we can drive returns for investors, and the pace at which we can fill those facilities.
And with your capex not taking much of a front row seat right now in this new dimension of growth, what are the capex priorities dedicated to?
So fundamentally, we have over 800,000 square meters of space and buildings and things, and we must look after that. That's, we're managers of a large estate, and we must make sure that those facilities are in good nick. So there's an element of maintenance capex. There's an element of replacement capex. So computers to replace old ones, a bus to replace the previous one, and so on and so on. So there's an element of that, and then there's the basics, things like waterproofing, painting, and whatnot. So there's probably it's close to 400 million rand that's dedicated in 2025, about 300 to 400 million rand, 350. Dedicated to maintaining what we have and keeping it really slick and good. Then there's a portion of about 200 to 50 million that's related to expanding facilities. That could be sports fields, school halls, those kind of things. And then there's work we do around water and energy to make sure that schools are sustainable, don't run out of water, don't struggle with electricity. And also some opportunities in that space. So that's kind of the bundle that we're looking at.
All right. Well, we do have to wrap up the conversation there, but looking forward to speaking to you in the next reporting period so that we can see if there are any green shoots there that do boost your growth. Thank you so much for your time, Cobus. That was Cobus Loubser, CEO for Curro.